You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
You know, every single day feels like we're just wading through this constant flood of global news, market data, huge geopolitical shifts. It's almost like trying to make sense of 1,000 conversations happening all at once on a busy street corner, isn't it? How do you actually cut through all that noise? How do you really grasp what's shaping our world without just feeling completely overwhelmed? Right, okay, let's dive into this. Today, we're doing a deep dive looking at a comprehensive global market and geopolitical briefing. Our mission here is pretty clear. We want to carefully pull out the most crucial insights, the stuff that really matters, to help you become not just informed, but truly well-informed. We're talking the latest in currencies, commodities, trade, and geopolitics, sifting through it all to find those maybe unexpected connections.
And that's exactly it. That's where the real value often lies, I think. What's really striking when you look at the sources we have here is just how interconnected everything is. These global threads, they're tightly woven. So we'll be looking beyond just what happened. That's the easy part sometimes. We want to explore why it matters, connecting these different pieces for you. Hopefully that gives you a clearer picture, a more sort of integrated view, and maybe spark a few of those aha moments along the way.
Absolutely. Okay, so let's kick things off with the economic currents and, I guess, the political ripples that are definitely making waves in the currency markets. The dollar, for instance, it saw a slight softening overnight. It had been holding pretty firm for a bit. And the trigger, kind of surprising, actually. It seemed to come directly from President Trump's announcement that he'd removed Federal Reserve Governor Lisa Cook. But here's where it gets really interesting, right? Cook has apparently just rejected the move, flat out, saying he doesn't have the authority to fire her. Now, that's not just, a political disagreement. That's a pretty serious clash. Unprecedented, really, at that level of economic governance.
Yeah. And this immediately flags a really critical question, doesn't it? What are the broader implications here? I mean, when you have such a direct challenge to the authority of a presidential decision, especially concerning a central bank official, beyond the immediate market reaction, the dollar dipping slightly, this kind of public defiance, it could signal a deeper, maybe structural risk to the independence of the Fed. It potentially undermines that global confidence in the predictability of U.S. economic policy, maybe more than just a standard policy fight. It forces investors globally to ask, well, are the rules still the rules?
That's a really good way to put it. Are the rules still the rules? You can almost feel that uncertainty spreading. Interestingly, though, despite that drama, the euro actually managed a little rebound. Came back from recent lows, got near 1.16 for a bit.
Yep.
But that recovery, it got capped pretty quickly. And not because of internal European issues this time. It was renewed tariff threats coming out of Washington, plus that ongoing political uncertainty in France, with elections potentially looming. Meanwhile, sterling, the British pound, it also tried to stabilize after a quiet holiday trading period. And Japanese yen, usually that safe haven currency people run to it, was a bit choppy, wasn't it? Run at 147. Got a brief lift from risk aversion, but then seemed to settle back.
Yeah, and if we connect this to the bigger picture, it just shows how fast market sentiment reacts. It reacts to direct policy threats like those tariffs and internal political stuff. Those external pressures, like from the U.S. and the domestic instabilities, say in France, they just compound things. They put a lid on any real recovery for currencies like the euro. It just highlights how linked everything is. And, similarly, the Australian and New Zealand dollars, they're still under pressure. The reports mention subdued risk appetite. And that's not just jargon, right? It means investors globally are feeling cautious. They're preferring stability over chasing potentially higher returns in riskier growth-linked assets.
Cautious mood indeed. And just quickly, speaking of currencies being watched closely, the Chinese yuan, its midpoint, the daily reference rate, was set just a little bit firmer by the People's Bank of China. Always something analysts watch like hawks for signals about Beijing intentions for the economy and managing capital flows. Okay, so understanding currencies gives us a read on investor sentiment. But how does that sentiment and the wider geopolitical stuff affect the actual raw materials, the things that fuel the global economy? Let's shift gears now and delve into commodities, moving from the dollar's dip to, say, oil fields and mines. Crude oil prices, for example, after climbing on geopolitical news, they've actually retreated modestly.
Yeah, and what's quite interesting here is this sort of dual narrative playing out in the energy sector. On one side, you've got Russian officials reportedly working on expanding their oil refining capacity. That's a long-term infrastructure kind of move. But then you look at the demand side over in Asia. Pakistan is apparently asking Qatar to defer some deliveries of liquefied natural gas, LNG, because of weaker domestic demand.
Those seem like two very different signals happening at the same time.
They really are. And the underlying story, I think, shows this contrast between long-term strategic planning and immediate economic pressures. Russia's move suggests a focus on future supply, boosting infrastructure, maybe value-added exports down the line. It's strategic. Pakistan's request, though, points to immediate demand problems, maybe a temporary economic slowdown, maybe seasonal factors, but it reflects a current challenge with consumption. So you get these conflicting signals about global economic health, one looking to build for the future, the other dealing with today's weaker demand.
And speaking of long-term strategy, this detail really jumped out at me. Canada's Alberta province is looking into investing in Japanese refining. The idea is maybe helping fund upgrades over there, specifically to process Canadian heavy crude. That's not your everyday partnership. What's the strategy behind that, do you think?
Oh, that's a great point. It sounds like a really smart strategic move, actually. For Canada, it's about diversifying their markets, right? Finding new places for their heavy crude, which can be tricky or expensive to process just within North America. They're maybe trying to bypass bottlenecks and get direct access to refining capacity that's suited for their product. And for Japan, it's likely about energy security, getting a stable supply from a politically reliable partner like Canada, diversifying away from other sources perhaps. So it really speaks to, long-term energy security for both, building maybe unconventional trade links based on specific needs and capabilities, securing those supply chains.
Wait, supply chains again. Okay, shifting to precious metals. Gold recovered from some early losses. You can trace that right back to the dollar dipping after that Trump Fed news we discussed. Meanwhile, copper futures, they stayed pretty range-bound, still feeling that risk-off mood and a cautious outlook for industrial demand.
Yeah, gold acting as that classic safe haven. That's predictable when there's political or economic uncertainty. But copper staying stuck in this range, despite everything, that's maybe more telling. It's not just risk-off. It could be a clearer signal from the real economy, suggesting that underlying industrial demand is genuinely weak. Maybe global manufacturing is bracing for a longer slowdown, not a quick bounce back. You know, they call it Dr. Copper for a reason, right? It's supposed to have a PhD in economics. And right now, the diagnosis seems pretty conservative. Oh, and adding to the supply side sensitivity for copper, remember those regulators in Chile? They're tightening the rules for restarting parts of Codelco's El Teniente mine. That's a huge mine. It happened after a collapse there. It just underscores how safety issues, operational stuff, can directly hit global supply and influence prices.
Absolutely. Safety first, but it has real market impacts. Okay, let's now turn our attention to the shifting sands of global trade and tariffs. And again, President Trump is taking a very, very assertive stance here, could reshape things. He's reportedly threatened significant new tariffs on countries with digital taxes or regulations that discriminate against U.S. tech firms specifically. And he's also warned about possible export restrictions on chips, which, I mean, that's massive given how vital chips are for everything now. These aren't small adjustments, are they? These could cause huge ripple effects across global supply chains. What's the bigger play here, do you think? Is it just protecting U.S. companies?
Well, that's the million-dollar question, isn't it? How do these kinds of threats actually play out in today's super interconnected global economy? Especially with something like chips. They're fundamental. Smartphones, cars, defense systems, everything. Actions like that, they're not just about collecting tariff revenue. They almost inevitably trigger retaliation, right? They could force companies into massive, costly reorganizations of manufacturing, of distribution. It disrupts tech supply chains globally, hitting everyone from the big manufacturers right down to consumers. So, yeah, it's partly protectionism, but it also feels like a strategic push for technological dominance.
It's interesting watching the diplomacy unfold, though, like with South Korea. The initial line from Washington sounded quite tough. But then, after President Lee met with Trump, there were suggestions of progress, surprisingly quickly. And the talks apparently even touched on cooperation in areas like shipbuilding and nuclear energy, not just the trade complaints.
It really does show how dynamic these negotiations can be. Diplomacy in action, I suppose. What starts as a really firm, maybe confrontational stance can shift, sometimes quite quickly through direct talks, high-level meetings. It shows that personal engagement, targeted discussions can sometimes find common ground or at least dial down the tension, even if only temporarily. The human element still matters in these things.
The human element. And then, of course, there's China, always central to these trade discussions. Trump has apparently made it very clear. China needs to provide the U.S. with key industrial magnets, or they could face tariffs up to 200%. That's a huge number. And talks with Beijing are actually set to resume this week. China's top negotiator is heading to Washington.
Yeah, and stepping back for context here, industrial magnets, they sound niche, but they are absolutely crucial. Think electric vehicles, wind turbines, advanced defense tech, even consumer electronics. They're everywhere in high tech. So this demand from the U.S., it really highlights this broader global push to secure critical supply chains, to reduce dependency on single countries for strategically vital materials. It's part of that trend towards, friendshoring or diversifying sources for components that have both economic and national security implications.
Right. And elsewhere in trade, just quickly, there seems to be some movement towards cooperation too. Canada and the US are having trade meetings after Ottawa removed some tariffs, so maybe some de-escalation there. And down in South America, Mercosur, that's the bloc with Brazil, Argentina, etc., they've agreed with Canada to restart talks on a free trade agreement this autumn. So some positive signs too. These trade fights, though, and the diplomatic maneuvering, they often feel like symptoms of deeper geopolitical tensions, don't they? So moving from tariffs, let's shift focus now to some of those geopolitical flashpoints where the diplomatic plays are really intense, particularly in volatile areas like the Middle East. Tensions are still extremely high there. Yeah, President Trump apparently voiced some optimism about resolving the Gaza conflict within weeks, mentioned it needs settling soon, maybe through a wider regional agreement. But elsewhere in the region's dynamics, Australia has taken some really strong steps regarding Iran. They've expelled Iran's ambassador, which is a major diplomatic move. They're accusing Tehran directly of directing anti-Semitic attacks within Australia.
And they're planning to formally designate the IRGC, the Islamic Revolutionary Guard Corps, as a terrorist organization. That's a huge step, isn't it?
It really is. What's fascinating, or perhaps alarming, is the level of escalation in diplomatic measures here, and the legal and political weight behind designating a state entity like the IRGC as terrorist. That's not just rhetoric. It opens the door to very serious sanctions, financial restrictions, travel bans, actions against anyone providing support. It signals a severe breakdown in relations and a very firm stance against what they see as state-sponsored aggression. It's Australia drawing a very clear line with Tehran with potentially wide-ranging consequences.
Wow. Okay. Turning to Russia and Ukraine. President Zelensky met with the U.S. envoy, Keith Kellogg. They discussed security cooperation, drone production deals. Zelensky stressed the need for real talks that put genuine pressure on Moscow. You contrast that with reports of Trump's discussions with President Putin, apparently covering big topics like nuclear missiles, denuclearization, and Trump reportedly noted Putin wasn't keen on meeting Zelensky. Then, quite dramatically, Trump offered his own personal intervention if there's no progress in 2 weeks. It sounds almost like a personal challenge being laid down.
If you connect that to the bigger picture, what you see is this complex, almost fragmented set of diplomatic efforts happening simultaneously. On one hand, Ukraine is pushing for concrete security guarantees, substantive negotiations, maybe UN-backed to build pressure, conventional diplomacy, alliance building. On the other hand, you have this very high-stakes, almost personalized approach from Trump, trying to bridge this enormous gap between two deeply dug-in leaders. It really highlights the different strategies being tried, from traditional alliances to highly personalized, maybe transactional diplomacy. The big question is which approach, if any, can actually move the needle in such a difficult conflict?
Right. Which approach works? Shifting focus to Asia now. Trump and South Korea's President Lee apparently agreed to work closely on North Korea, though President Lee himself stated publicly that sanctions alone aren't enough to achieve denuclearization. And this comes alongside some really stark reports suggesting Pyongyang might now be able to produce 10 to 20 nuclear weapons annually. That's a rapid pace. Plus, North Korea's military condemns recent U.S.-South Korean military drills as preparation for occupation. Standard rhetoric, maybe, but still adds to the tension.
Well, this raises an incredibly important and difficult question, doesn't it? How do you actually manage a nuclear proliferation threat when the state involved is boosting its capabilities so quickly? And when key players, like South Korea's president, are saying traditional methods like sanctions just aren't sufficient on their own, the North Korea situation really highlights that tricky balance between deterrence, things like military drills, which Pyongyang calls provocative, and the absolute need for some kind of dialogue. It underscores why President Lee invited Trump to the APEC summit, specifically hoping for direct talks with Kim Jong-un. It feels like a push for high-level personal diplomacy, almost out of desperation, to break a cycle that seems completely stuck. It's a gamble on dialogue, really.
A high-stakes gamble indeed. Okay, finally, let's just take a quick look at Europe's economic health, because while we focus on global crises, domestic stability underpins everything. Specifically, let's touch on the UK job market. Yeah, a UK think tank has put out a pretty sobering warning. They're forecasting a rapid weakening, potentially seeing unemployment hit 5% by late summer. If that actually happens, it would be the highest UK unemployment rate since early 2021. That's quite a turnaround after a period of relative strength.
And this is just such a critical reminder, isn't it? While we often get caught up in the big geopolitical dramas and trade disputes, the economic health of individual countries, especially jobs, that has a direct, profound impact on people's actual lives. And it absolutely affects wider market sentiment and stability, too. A weakening job market in the UK isn't just a UK issue. It could ripple across Europe. Less consumer spending there, combined with ongoing worries about inflation. That could dampen confidence and investment across the continent, especially as Europe deals with its own energy challenges and slower growth. It's a key internal pulse check amid all the external storms.
So wrapping this all up, what does it all mean? We've journeyed through this really intricate, sometimes chaotic world of global finance, trade, geopolitics, from, the dollar dipping after that Fed dispute to those strategic tariffs on industrial magnets, from the diplomatic chess games in the Middle East and Ukraine, right through to the complex growing challenge posed by North Korea. It just seems so clear that everything really is connected.
Yeah, and our deep dive today, that was the aim, really. To try and highlight those critical connections, to show how something seemingly isolated, like a personnel dispute at the Fed, can ripple through currency markets globally, or how those trade talks over magnets link directly to securing resources with huge geopolitical weight. We've tried to give you not just the headlines, but the so what behind them, hopefully encouraging you to think critically yourself, to connect these global forces in ways that make sense to you. Maybe consider this. In an era where everything is so interconnected and information moves at lightning speed, how might your understanding of these different areas, finance, trade, geopolitics, influence decisions you make? Big or small, in your own sphere? What other connections, maybe surprising ones, can you draw from everything we've unpacked today? The world really is this complex tapestry, isn't it? And pulling one thread definitely affects others.
Thank you for joining us on this deep dive. Stay curious, keep exploring those connections, and we'll be back here to help you make sense of the world, one stack of sources at a time.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.